Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chan, a chartered professional accountant located in Oakville, Ontario, Canada. A lot of people are asking me about questions on how to deduct automobile expenses. Well, the reality is that the Canadian Income Tax Act actually allows you to deduct any reasonable expenses that you incur for the purpose of earning property income or business income, subject to a bunch of exceptions. Now, automobile expenses, a lot of us are using our car, personal use vehicle for running employment purposes, for earning business income or property income, and therefore it is reasonable to establish that cause and effect relationship between incurring the automobile expenses and earning the income. And therefore you are generally eligible to claim automobile expenses. But how and what do you actually need to keep in order to audit proof your deduction? And we are going to dive deeper into that type of situation specific example to show you what you actually need to keep and traps that you may be stepping yourself into. But before I get started, make sure that you hit the subscribe button below and give us a thumbs up if you find that our video is useful. With that, let's get started. Okay, so before I get started, I think it's important to reiterate the importance to make sure that you keep all the receipts regardless of what you are claiming. In Canada, it is important to prove your expense by keeping the original receipts. Visa statement, bank statements that track all your gas expense are not sufficient. CRA only accept the actual receipts. So for those of you who are having trouble keeping all your receipts, sometimes it may be helpful to use a software or at least take a picture of the receipt immediately after you incur the gas expense. Make sure that you take a picture. Some of you guys may be a little bit more advanced in terms of using app integration to do bookkeeping. You may want to use HubDoc or Deduct, another app, or QBO directly, or even Xero. They all have the functionality to allow you to take a picture of the receipt immediately after you incur the expense to help you to avoid losing the receipt. Now that we get that out of the way, let's talk about what kind of expenses that you would be eligible to deduct when you use your auto vehicle for the purpose of earning your employment income, property income, or business income. For people who are having electrical vehicle, you're eligible to claim any charging costs that you incur. So there are lots and lots of charging stations everywhere these days. You would be eligible to claim the charging costs, and to a certain extent, it's pretty helpful to track your charging costs because there are lots of apps available. Every time I go to the charging station, they often require me to download the app, and therefore I always have access to the receipts. I don't even need to take a copy of it. I get an email receipt and I forward it to my HubDoc account to keep track of my expense. So charging cost is deductible, maintenance is deductible, maintenance that would include your oil change, your tire change, any type of maintenance cost that you incur. So that would also be part of the deductible expenses. Auto insurance would be tax deductible as well. License and registration, right now in Ontario, there's no more license fee in terms of registering your vehicle. But if you are in the province that still has the license fee, then license and registration would be deductible. And then there is any other expenses. So for example, CAE membership is one of the example for other expenses that's related to your vehicle that would also be technically deductible. And then another example of the other would be 407. In Ontario, 407 ETR is the pay highway. I often put my 407 ETR bill under the other section for deduction as well. And then on top of that, you are also eligible to deduct leasing costs and all capital cost allowance. So if you lease your vehicle and you use that leased vehicle for the purpose of earning your employment income or business income or rental income, that leasing cost up to a maximum of 800 plus HST per month would be tax deductible. Now the way that they calculate the eligible leasing expense that you are eligible to claim is not really based on $800. The reality is it's really based on the purchase price of the vehicle, the manufacturer listed selling price of the vehicle. It is a formula that could be found on CRA's website, and you have to go through the whole calculation to actually come up with the deductible eligible leasing cost amount. You may have a vehicle with monthly lease of $750. It's below the maximum of $800, but because of how the formula is calculated in terms of what it could be eligible for deduction, the actual amount being deducted could be $600. So if you really have to go back to the actual calculation and actual formula as specified on the Income Tax Act to come up with the eligible leasing costs that are deductible. If you own the vehicle directly, you would be eligible to claim something called capital cost allowance of the vehicle. Now, when you purchase a vehicle, you would be paying maybe $100,000, maybe $50,000, maybe $80,000. Vehicle pricing these days are crazy. No matter what you pay for, if it is a regular vehicle that's not an electric vehicle that qualifies and meet the definition in CRAs in the Income Tax Act, a regular vehicle, even if you pay $100,000, even if you pay $90,000 for a Ford truck, that vehicle is the maximum you can claim is $30,000 plus HST. So you may pay $70,000 plus HST, but maximum you can claim under capital cost allowance is $30,000 plus HST. And the capital cost allowance is really calculated based on a declining basis. So the first year you get the maximum deduction, but not $30,000. It's $30,000 times 30%, and then it gradually goes down every single year. In the case of the electric vehicle, the first year that you can claim is $55,000 plus HST multiplied by the business use, and then in the future year, if you claim the full 55 in the first year, then there's nothing to be claimed in the following years. So it gets a little bit more complicated when it comes down to lease versus purchase. I have a different video for you to compare leasing versus purchasing a vehicle as well. So you can visit and watch that video to make sure you get the gist of whether you should lease versus buying a vehicle. Last but not least, there's also parking expense. So parking expense is eligible for deduction. Parking is related to a vehicle, so I put it down here, but the reality is that parking expense is only eligible for deduction if the parking is incurred directly for the use of running your business or employment purpose. Now, let me use an example to explain. If you take your parents to an Italy trip and you drop your parents off at Toronto Pearson International Airport, and you incur parking because you're dropping your parents off and they're flying off to Italy, and you incur the parking cost. That parking cost is not deductible at all, 100% personal, and therefore no deductibility allowed. Now, on the other hand, if you're a real estate agent and you're taking your clients around downtown Toronto and you incur $32 to take your clients to show a particular condo building in downtown Toronto, and that $32 or $30 parking cost would be 100% deductible. So that's where the difference is coming in from. Parking is 100% deductible, but only to the extent that the parking cost is incurred for the purpose of earning that particular income. So these are all extremely important to make sure that you keep all of the receipts so then you can audit prove your deduction. Now that we've covered what could be potentially deductible in terms of expenses, the CRA is also very fair in terms of what you're allowed for deduction. They're not going to allow you to deduct the entire car's expenses, especially for the ones that are using their vehicle for both personal use as well as business use and employment use. So you're only eligible to claim the business use percentage of the vehicle. Now, the key here to calculate the business use percentage or employment use percentage or rental use percentage of your motor vehicle, the key is auto log. You are required to keep an auto log book. In that auto log book would need you to log all the mileage that you've incurred for the purpose of going around for employment purpose, business purpose, rental purpose. So now let's use an example to illustrate the kind of information that you really need to document in your auto logbook. So let's say on October 28th, you are driving to Toronto from your home to see a client and from your office or your home to see a client. And that trip is about 50 kilometers. Now, so in your logbook, what you would have to do is to log down the date, which is October 28th. The destination is the exact address. Let's say it's 123 ABC Street in Toronto. So you have to write down the exact address, and then the purpose is to meet clients. I would go as far as documenting the name of your client. Let's say it's Peter. And then the number of kilometers driven, as mentioned in my example, is 50 kilometers. So this is the type of detail of information to the extent, like the extent of the information that we have to keep track for every single entry that we do, every single trip that we take. Of course, if one trip is 50 kilometers, you would have to come back to your home base or business base, and it would be another 50 kilometers. So you may want to do times 2, so it's equal to 100 kilometers. Now, so let's say odometer reading at the end of the year is 22,000. At the beginning of the year, you just purchased this car. So realistically, between personal and business use of the vehicle, you've driven 22,000 kilometers for the full year. Now, let's say you did 100 of these trips, 100 of 100 kilometer business trip. If that's the case, you take 100 kilometer times 100 trip, 100 business trip. The total kilometer driven for business purpose is about 10,000. 10,000 kilometers, okay? So this is based on your logbook, the actual day. You need to provide the actual day, the destination purpose for every single 100 kilometer trip that you've taken. But in my example, I just simplify everything. I just said that, hey, like I visited the same client for the last 100 times during the year. Every few days I visit the client. And that incurred 10,000 kilometers in total for business purpose. And so that 10,000 kilometer is the business use of the vehicle. So what CLA would do is that they take the 10,000 kilometer, divide by the 22,000 kilometer that you've driven for the full year, the combination between personal use and business use, and prorate it. So 22,000, 10,000 divided by 22,000, and that would be the amounts that you would actually be able to deduct. Multiply the proration, the percentage would be what you have to. So about 45% of all of the expenses that we mentioned earlier, so your gas, your maintenance, your insurance, your CCA, capital cost allowance, or your leasing costs would be tax deductible. Okay, let's go through all of these, combine all of them together and see how we actually come up with the actual deduction amount for auto vehicle expense. Now, in our previous calculation, we come up with the business use percentage of your motor vehicle as 45%. We came up with it by calculating the business use percentage, the business use kilometer, which was calculated as 10,000 kilometer, divided by 22,000 kilometer, which is the total kilometer you've driven for the whole year for that particular vehicle. And if you have multiple vehicles, by the way, you have to keep 2 logbooks. So 1 for each vehicle. If you have like 3 vehicles, you have to keep 1 for each of them. So it's important. And also, as another tip, the motor vehicle, the mileage that you've driven between your home and the office is not tax deductible. So as an example, if you have a permanent office in an office building in Mississauga, say, and you live in Oakville, and the mileage that you drive every day from your home to your office and from your office to home is not tax deductible. Now, on the other hand, if you are operating from your home, you don't have any other office establishment anywhere else. As an example, for a real estate agent who doesn't have an office in their brokerage that they belong to, they operate primarily from their home and they see clients in the properties. Their home would be then their office. And every time they drive out to see clients, everything is tax deductible. If they have to go to the brokerage to pick up a check or see the broker of record, that mileage would also be tax deductible. So it's very important to distinguish the two. If you don't have a permanent office, you would likely be able to claim the mileage that you've driven from your home to the office. It goes back to your particular situation. Now that we clarify all that, we can get back into our example. Now, the business use percentage is 45% as we calculated before. As we mentioned really early in our example, you can deduct gas, maintenance, insurance, gas or charge, cost of charging, gas, maintenance, insurance, license and registration, and other expenses such as CAA membership, and then the leasing cost or capital cost allowance. And in this particular example, I came up with all the numbers. These are annual numbers. You are really supposed to have real numbers, so you are supposed to add up all your gas receipts to come up with this number. They are not supposed to be round number. For the purpose of today's presentation, I'm only using round number here. For the actual deduction, you're supposed to come up and add up all your receipts. Because I have clients who gave me round number on all the deduction, and immediately I know something's wrong. So for gas, let's say this person incurred $3,000 for the year, maintenance $700, insurance $1,600. There's no license and registration because Duckford gave us a brick, so there is no cost. And then this person also bought a CAA membership for $500. So and then this person also leased a vehicle, and after going through CRA's calculation, the eligible leasing expense deduction is $7,200. And now, if you add all these expenses up, the total expenses for the vehicle, operating cost of the vehicle, is $13,000 for the full year. Now, because we know that this particular taxpayer only drove 45% of the time for the purpose of running the business, and therefore only 45% of that $13,000 total is tax deductible. So applying that 45% to $13,000, you can see that the actual deduction is $5,850. So not the full $13,000 amount, it's only $5,850. Now we've gone through the practical example of how we would use to come up with tax deduction amounts to offset against your income in terms of filing taxes and determining the actual amount of automobile expenses that you would be able to deduct. There are a few common questions that I often get, especially on the YouTube channel. If you have questions, make sure that you leave in the comment section below, so then I can make sure that in the future videos that I produce, I would be able to cover some of these questions. Now, the first common questions that I get is, hey, like, what if I'm employed? If I'm employed and I'm using my car to run around to visit my clients and to visit client site or see prospective suppliers, am I also allowed to deduct the expenses? Am I also allowed to go through the calculation that you just went through to deduct against my employment income? Well, first of all, if you are an employee, the deduction is pretty much similar, assuming you qualify. There are a few criteria that you do have to qualify. If you're an employee, you're often required in your employment contract, you are required to regularly use your vehicle to travel between your office to your client site. So it has to be specified in the employment contract. You also need to get something called a T-2200. Essentially, it's a form that's filled out by your employer that would prove and declare that you are using your vehicle for the purpose of running around for your employment. Now, if you get reimbursed, sometimes the employers do reimburse the employee for the use of their vehicle. If you do get reimbursed, then the reimbursed amount has to be offset against the amounts that you are deducting. So let's say in my example, it's the amount that you were able to deduct was about $5,700, and you receive $1,000 from your employer as a reimbursement. The $1,000 would be offset against the $5,700, and you are only eligible to claim $4,700 on your personal tax return. So it makes a difference. The amount that you get reimbursed by your employer would be used to offset against the deduction that you take. So it's important. So you can still go through the calculation that we went through, but you have to be careful in terms of the documentation and the amount of reimbursement that you receive to make sure that you are complying with all the Income Tax Act. The next question that I often get is, can you use something called the mileage allowance to claim against your employment business or claim against your self-employed business or your corporation? Well, the reality is that CRA did come up with the mileage allowance that are reasonable. And in 2022, for the first 5,000 kilometers that you've driven for the purpose of earning business income or employment income for a corporation or rental income, you can claim up to 61 cents per kilometer. It's reasonable amount. You would then not be required to claim that 61 cents per kilometer driven as your income when you receive the money as a reimbursement. That is a reasonable amount. For anything over the first 5,000 kilometer, right now is sitting at 55 cents. So the calculation vary depending on the actual kilometer you've driven for the purpose of earning that income. Now, so the question is, hey, Cherry, instead of going through all the calculation that you've gone through, keep track of all the gas receipts, maintenance record, insurance, and all these extra receipts that I have to do, can I just keep the logbook and then multiply by the mileage allowance and claim it against my self-employed business as a sole proprietor? Or can I use that auto logbook and claim it against my corporation that runs my business? Now, the easiest answer is with your corporation. If you run your business through a corporation and you're trying to get reimbursed for using a vehicle to run the business for the corporation, you can use that mileage allowance that's specified on CRA's website, and every year that number change. And you would be able to use that mileage allowance. You would still be required to do the auto logbook that I mentioned earlier. All you need to do is take that 10,000 kilometer that we've calculated and then multiply by the appropriate number, 61 cents for the first 5,000 kilometer and 55 cents thereafter. If you are running your business as a sole proprietor, CRA doesn't really necessarily say that you could use that same mileage allowance to claim as automobile expenses. Typically on the CRA prescribed form, it has the automobile expenses listed in detail, including gas, maintenance, license, registration, insurance, everything. So in other words, there is no specific rule that allows you to use the allowance. It's not saying that you're not allowed to do it, it's just that there is no specific rule. So on a conservative side, I would always go for the detail method. Keep track of all your gas expenses, keep track of all your insurance expense, keep track of maintenance expense and all the receipts, everything that's related to claiming the automobile expenses if you run your business in your personal name. Okay, last but not least, as a lot of real estate investors out there, real estate investing is one of their side hustle. You may also run a sole proprietor business, you may be a self-employed, a realtor, or you may be a doctor and have a few rental properties. If I use my vehicle to run multiple businesses, how do I keep track of that mileage and how do I claim the expenses? Well, the reality is the magic happens where the auto log is. So in your auto log, you're required to document the purpose of each trip. And when you do the trip, when you log all your business use, let's say you have a business, one business, self-employed business, and then you also have a couple of rental properties. And on your auto logbook, you will divide the log based on or document your travel, your trip based on business use versus rental use. And from there, only a percentage is deducted against your business. Only the business use percentage is deducted against the business income. And the rental use percentage is deducted against the rental income. People would ask, well, what if I use my vehicle for like my sole proprietorship, my rental properties that I hold personally, and then I also have properties that I own in my corporation? Then again, the magic happens with the auto log. You just document it, and then at the end of the year, you sum it all up for different purpose and you claim the expenses accordingly. Now that we've covered everything under the sun with respect to claiming automobile expenses, if you have any questions like I mentioned before, make sure that you leave it in the comment section below because I know a lot of you would be confused. And if you have any questions, I'm happy to answer them in the comment section below. If you have questions on buying versus leasing a vehicle, make sure you visit my other video. Here's the link, and you would find a lot more in-depth analysis in this particular vehicle. If you're interested in buying a Tesla altogether, there are 2 videos that I did earlier to show you the benefit, the tax benefit of buying an electric vehicle or a clean vehicle per se. If you find this video useful, make sure you give us a thumbs up and share it with your friends. Make sure you also hit the subscribe button to stay on top of the latest tax tip. Until next time, thank you for watching.